that the biggest surprise to us over the since we started our research on Bitcoin into actually 2012, is that stablecoins are starting to usurp a role that we thought Bitcoin would play. We thought Bitcoin would be an insurance policy for emerging markets against confiscation of wealth, either outright or through inflation and other terrible policies. What has happened is the stable coins are taking over. They've hit almost $300 billion. And so we think that that insurance policy role will take $200,000 to $300,000 out of our bull price, which our bull price, of course, was 1.5 million. And we're public with that. That's why I can say this.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge.
Cathie Wood dives into when will market drawdowns subside, sharing insights on innovation, volatility, and recovery. Let's tune in and learn.
But that was in an all other things equal world. What has also happened, of course, is what we've been discussing. The gold price has doubled. So the gold market cap has doubled. And part of our analysis for the potential for Bitcoin was that maybe it would become half the market cap of gold. It would take some share from gold or maybe expand the market. Well, that market has doubled. So I don't think our bull price should change all that much. And I probably should have been quicker to say all things equal on CNBC the other day. So I just wanted to clarify that. We are very bullish on crypto assets, but we know that they are the most susceptible to liquidity drawdowns. And I described earlier, we have a number of reasons for liquidity drawdowns now, but we think that they will be cleared by the end of the year. And hopefully by December 10th, when the Fed eases. And hopefully when government statistics come back and we get the employment report in early December, which is the next time that I will have the pleasure of doing In the Know. So hopefully we're in the clear by then, and the bull market that we believe is firmly in place will continue apace.
Bitcoin sitting around the $100,000 mark may seem like a triumph, but Bloomberg's Mike McGlone warns it's more of a do-or-die moment. He believes the calm across both stocks and crypto is deceptive, a quiet before a potential storm. Volatility, which has been resting near historic lows, rarely stays this subdued for long. McGlone's latest analysis highlights what he calls extreme complacency. His charts compare Bitcoin's 50-week moving trend line with the SIBO Volatility Index and the S&P 500's realized volatility. All three show markets that are unusually stable, a pattern that has often preceded sharp corrections. He suggests that equities might soon catch up to volatility levels, hinting that turbulence could return faster than investors expect. For Bitcoin, the stakes couldn't be higher. Hovering near $100,000 after failing to break $110,000, the cryptocurrency now faces a defining moment. If it can hold this level, it could reinforce its role as a resilient asset. But if not, McGlone warns it may retreat toward its long-term average near $56,000. With Bitcoin's correlation to the S&P 500 still above 0.53, any move on Wall Street could be the spark that ends this uneasy calm.
What is going on? I think it's China, and we saw that exports to China exports to the United States from China were down 25%, I think, in September. They were up 3% to the rest of the world. What does that mean? They're probably cutting prices more aggressively in order to get increased uptake in the rest of the world, given what's happening in the U.S. That's a deflationary impulse, all right. And you can see the green line here is Treasury yields. Why aren't they as highly correlated today as they have been? The high correlation stopped in 22 when the Fed started tightening. Well, maybe if the Fed eases, this will come down more rapidly. And we think it will. And we think the inversion of the yield curve might continue for that reason. Here, for market-based indicators, S&P to gold. This one we've been watching like a hawk. Gold up, S&P wobbly. So you see testing. We do think it's going to resolve to the upside ultimately, especially if the chart I showed you earlier with gold price going down relative to money supply, if that is what happens now. The odds are high that it will happen because, as we saw from that chart, there are only 2 other times it's been this high. So we do not think it's going to resolve like the 70s when S&P fell relative to gold dramatically because inflation was such a problem. We think quite the opposite. Deflation is.
Bitcoin just passed its biggest test yet, the $100,000 crash test, and came out stronger than expected. After briefly dipping below 6 figures, the world's largest cryptocurrency quickly rebounded as major investors, or whales, scooped up roughly 29,600 BTC, worth about $3 billion. This sudden accumulation suggests that large players still see strong value at current prices, turning what could have been panic into a show of confidence. Analysts believe the recent volatility wasn't a sign of a market top, but rather a short-term reaction to U.S. fiscal tightening that temporarily drained liquidity. Plan B, creator of the famous stock-to-flow model, views the dip as a mid-cycle pause. He points out that Bitcoin has held above $100,000 for 6 straight months, transforming that mark into resistance into solid support. And with the RSI still below overheated levels, there's room to grow. Macro experts like Arthur Hayes and Raoul Pal echo this optimism. They predict expanding liquidity in early 2026 could fuel Bitcoin's next big move, potentially toward $250,000 or beyond. For now, whales are buying, sentiment is low, and history suggests that's exactly how major rallies begin. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news, all for free. That's all for today's video. Until next time.